daily S&P 500. We have a lot going on in Europe. Geithner's over there, all the contagion. Merkel's there, Sarkozy's there. Italy's a big problem. Spain is even a bigger problem. The thing about it is we've rallied up. We have traded throughout this whole complete long side. This 200-day moving average is that we're short sellers irrespectively going into January. And irrespectively of any resolution out of the Europe trade, because this is a European bid and ask trade, markets have been held hostage for quite a while. What I would like to say on the S&P is you have to still be short below the market in case there's a big fallout, which we are buying puts down here. On the other hand, the upside calls that we've been at this 200-day simple moving average, all based on headline event, folks. Everything is headline. Everything is out of Europe. Today, they're meeting. I can tell you right now, they're having a hard time coming to some of the conclusions. That will be dealt with on the European debt crisis economic show that SMF will have. Info at stockmarketfunding.com. Stay tuned for that one. However, it's classified that this is a daily reversal bar on the opening bell. Basically, the upside volatility will remain at 1320 on the S&P, and the downside support level in the near term on the S&P will remain at the lower range of the SMF market maker range. We're going to use that number I would say we're going to go with the 1218. That's going to be the lower end of this range support, which is going to be the 50-day simple moving average. If we come down to the 40, the 20, and the 10, that's the 10-day and the 20-day. These key areas is going to be 1230 on the S&P. So that's the 10-day simple moving average, 1226, 1225. These are your key daily moving averages. If they sell through, then we're going to sell down toward the lower end of the range. Until we get a break above the 200-day simple moving average and a consolidation above the 200-day simple moving average, these markets remain highly volatile, very risky for a regular type of investor who is trying to make sense. I do these live entries and exits as a market maker in the exchange model for most of my life and with people that are in our school. So MMTs, they know how to deal with it, but the thing about it is that the markets, the broader markets, are going to remain weak. Even if we break above that moving average, that 200-day, and we go up toward the higher end, we're going to be selling into it, because there still will be a liquidation process that will happen. Mid-morning update on the S&P, same thing here on the Dow Jones Industrial Average. That's a reversal from the peak high. You burned it right here. This is that key resistance on the Dow. On the mid-morning update, that's a reversal. We'll watch and see if Europe is going to come out with something more that people like. But remember what we always said. Buy the rumor about the Europeans and sell into the news. Dow at major resistance reversal daily at 9:17 a.m. Pacific Standard Time. The Nasdaq comp update, 200-day moving average reversal daily. This one's, listen, the Nasdaq is already starting to lead the pullback. Buy the rumor, gap, sell into the news. 200-day moving average on the Nasdaq comp is at risk. Because, why do I say it's at risk? You're going the wrong way. You're not closing above it. Yes, headline volatility. Yes, all of Europe, all of Geithner, everything about Sarkozy, everything about Merkel, everything about Italy, Spain, yes, everything about how much money is going to go in. What is the IMF going to do? What is the ESF going to do? How will stocks in the U.S. fare out? Once again, the contagion. Once again, the support level on the Dow. Buy the rumor. Buy the rumor of the European and learn how to sell the news. We'll see where the pullbacks hold on the Dow. and the Nasdaq comp and the S&P 500. In this chart right here, Nasdaq comp right now pulling back to the 40-day moving average, has support down here at the lower level. Markets are selling into Europe mid-morning.